Hello traders, Gary Wagner here, just about 11:15 in Honolulu, 4:15 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 13th day of February 2015. This is the daily report for gold and silver, our weekend review, and it looks like we're ending the week on a pretty nice little bang to the upside, especially in the equities markets, but we are seeing it in gold, we are seeing it in oil. All of those markets being up today. First to gold, up about $7 on the day, $12.29 and change. High $13.02. Low is got to be around $12.21. Silver also showing some promise, actually up about 46 cents on the day. Quite a nice move, about 2.5%+. Most importantly, it is over $17 an ounce, trading at $17.29. It has had a low of the day at $16.84 and a high of $17.42. More on silver towards the end of the show. Traders, so I want to take a look at this daily chart. We talked about this over the last couple of days, and we actually have gotten the criteria necessary to issue a buy signal in the market. Going to wait till Monday in the overseas trading, meaning when it opens up in Australia, we get any kind of firm order, you can go ahead and buy at the market, buy gold at the market. We'll be sending out a special trade notification on Sunday here in Hawaii or Monday morning here in Hawaii. I just want to see a little bit of follow through. And here's what we're looking at, and here's what really precipitated this signal that we're going to be issuing. First of all, as we saw this market come down, there were a couple of points that we were really looking at as a potential area for this market to actually find some kind of support. And traders, as you can see, I've added in those lines. So the first place that we looked at for a potential conclusion was really a 1254. It was based on this 38% retracement. Again, this is a daily chart. You can see that we had these series of lows here that seemed to find support and bounce back off of that. That wasn't really to live very long. Market kind of runs through that like a hot knife through butter. And it actually, at the same time, runs through the 50%. You can see that right here. It tries to find a little bit of support in this area for a couple of days, and boom, comes back down. So we broke through our first level, our second level, and then this is the real interesting level because this is a 61% retracement. Now, typically, you don't get a retracement this deep if you have a rally and a 61% correction, then you get another rally. You typically get a more shallow correction. That was not to be the case here. But what we did notice is as this market came down and tested this area roughly at the 1220 area, on yesterday's candle, we noticed a candlestick pattern type that could be identified as an inverted hammer. We talked about the inverted hammer because what the inverted hammer is a long-tailed candle with a very, very narrow body, and the body size is at the bottom of the trading range. If it's at the top of the trading range, it's called a hammer. This, of course, being part of the umbrella candlesticks on the top, you get a shooting star or hanging man. So there's 4 different types of candles. Now, you can't take this call really without confirmation. Confirmation, as we talked about yesterday, is actually getting a green candle with a higher high and a higher low. Now, we've gotten that, and the reason for issuing the buy signal on Monday is as follows, because now, if you look at this 3-day pattern, what we're actually now looking at is really a variation off a 3-river morning star. Market comes down, red candle, star formed in the center, and then a green candle. Now, on a 3-river morning star, you will typically wait for confirmation for that. And so I'm just trying to be a little bit cautious in terms of getting in at the right time. I don't mind getting in a little bit later, but in essence, what we're looking for is kind of a scenario like this, and that gives us really our V or our pivot point based upon this inverted hammer down on the lows. So again, trade alert, we are going to be sending out special trade notification to get into the market on the long side. This would be a Monday for those in Europe and Australia. We will issue this either Sunday here or Monday morning here as the markets open in New York. So traders, we had a record close in the Dow Jones Industrial Average, closing above 18,000 again. In terms of the Standard & Poor's, we are looking at a market right now that has reached or is near the tops that we've got. I don't think this is updated because I do believe that the close was around 94 or 96. Let's pull up another chart for the S&Ps. And this is really the tell of the tape, so to speak. This is a half a day standard candlesticks. This chart is, in fact, updated when we look at it. There's absolutely no doubt. Here's our former high at 2090. And we can see that the market has closed at 2093. Now, in terms of the other markets that we do follow and we do look at, this is a weekly chart. Dollar index still under pressure after finding some really decent resistance roughly at around 96. You can see that on this weekly chart. You've had pretty much a runaway freight train from last year come into July. We've had a couple of areas here and here in which we saw the market consolidate before moving back up. And so the real question that we've been asking ourselves, are we looking at something similar to this type of action here, or do we have a real market top? When we go ahead and compress this chart, let's go ahead and do that. We can see that it, of course, exceeded this top back in 2010. And before we can actually find an area in which it was resistance, we really have to compress the chart. As you've seen, I've just done that. This being 1997 here. And you can see this is the record top that we've got in terms of historical data in there. And so the reason that that's important is I do want to put this particular high at 96 into perspective, because when you look at it only looking at historical data, say from this point to here, you genuinely see a top that we've never seen before. That's not the case. We've seen tops higher than that on the dollar index, but we do genuinely have some resistance in this area. Traders, oil is higher today. Part of the reason that's been cited for the stock market doing so well, up well over $50 at 52, 58, 52 and change. On a monthly chart, you can see that we've had a solid up month. If we convert this to our weekly chart, you can see that we've had the last 3 weeks trading higher, although this week very, very slightly higher. And we have made a new, I believe, high and a higher low on the week as compared to last week. So when we look at it through those eyes, it was a pretty strong recovery. And then when we look at it in terms of a daily, that's really not what I want to do. But if we look at it back in terms of a weekly, this will show us it does appear as though we could be looking at least a stabilization in price. Now that the market has climbed for 3 weeks, is it going to, find some resistance maybe up at 55, 60 and move back lower? That's something we'll have to determine at a later point, but at least we have found some stability in the market. So traders, we are looking at a weekly chart in silver, and we can see that it has had a nice strong up week as opposed to gold, where gold, if we look at our weekly chart on gold, let's go ahead and put that in, you can actually see that it has not closed up on the week. That's this red candle here. We'll just make sure that these weeklies are properly updated. Sometimes they're not. And in fact, it looks like it has. So we've had a stronger week in silver in terms of a price incline than gold. We are going to take a serious look at entering the market from the long side in silver when we issue the solid buy signal in gold. Again, this being our gold chart, our daily chart, and all I'm looking at right now is we did get the inverted hammer. We got a confirmation from that fairly strong up, as I said, about $7. I simply want to wait for now, excuse me, now that we have this pattern formed into, as I said, a 3-river morning star variation, gives us a little bit more safety, letting that confirm, and then entering somewhere right around here on this candle, which would come out on Monday. This has been Gary Wagner, wishing you as always good trading. We will talk to you beginning of the week, and as I said, as long as we get any kind of a firm opening, not a down open, as this market begins to trade next week, we will issue a trade recommendation. Have a great weekend. Bye-bye.